What's up, folks? Welcome back to the channel. So it's that time of month again, and one of my favorite videos that I always look forward to doing. It's time for that on the QYLD monthly dividend update. But instead of just talking about that, I decided to cover my whole dividend portfolio today. So I'm going to start out with basically on an annual basis what I look for in projected dividends, which has actually increased because I moved a stock over to my E-Trade that was at another platform. So the dividend that stock pays increased the overall projection for the portfolio. So between accounts here, for 1 year out projected almost 5,000 in dividends now because of the one stock that I moved, which pays a really nice 4% dividend. So 49.0915 to be exact. And you can see by month here, like the month of July should pay this. August is actually a really good month because certain stocks like AT&T and I believe Blackstone pay really good dividends. Falls off in September considerably, rebounds a bit in October, November. And then December, you can see September, December, basically the end of the quarter months are lower. Now let's filter here. So the QYLD dividend dropped again. And I have some theories on why that's dropping, not just with the dropping of the fund, but let's scroll down to that. So, and again, this pays a monthly dividend. And this is in the main account here, $12.15 per month, which on a 12-month basis is $145. And let's see, the Roth IRA. So of the total amount, 1,337, and the Roth IRA, AT&T pays the biggest chunk of this. The QYLD, because I have more of it in the Roth, it's 36.43 per month off of 210 shares. So that's down to 17 cents. So I think what's happening, the fund is dropping because if you understand how covered calls work, the premiums for covered calls are going to drop as the stock drops. Because if you think about it, when the stock is higher, the options, call options for the stock are going to be higher as far as the premium that they pay. So when you're doing covered calls, the price of the call option that you're selling against that underlying stock is going to be higher because the stock price is higher, if that makes sense. So what's happening, because this is indexed for the NASDAQ, as the NASDAQ has dropped 30% in the first half of the year, the premiums for the QYLD are also dropping. And that's my theory. So I think that as the NASDAQ recovers, I think the QYLD premiums will also recover. So I think this dividend will rebound. That's a hunch, may not necessarily be accurate. But let's look at the performance here in Yahoo Finance. So over the last month, since the last video I did, it's dropped about 50 or 60 cents. It was at 1807. And this kind of goes in conjunction with the overall market because we saw some big drops again in the month of June because we had some major announcements. We had another Fed rate hike. We've had manufacturing data come out. We've had CPI data. And most of the indicators coming out right now have been negative because we're going into a recession. The GDP number was 1.6% revised. So they can't try to go back and revise that now to say it was up, because I think everybody at this point anticipates the Q2 number is going to be negative, which again, 2 consecutive quarters of GDP contraction is the definition of a recession. So now that the revised number has been kind of set in concrete being negative, and there's a solid chance that the second quarter number is going to be negative, we're pretty much guaranteed to be in a recession. I believe we're in one now. It just hasn't been declared yet because it won't be declared until that GDP number comes out for the second quarter. But like I say now, let's just get it over with, take the pain now and move on. And then hopefully in 6 months to a year, I don't think it'll last long because I think the fundamentals of the economy overall are too good to stay down for too long. Plus there's too much money invested in the market anyway. The market typically is a leading indicator. So like in 08 and 09, the market was really the first thing to start recovering. In the year 2009, the economy, well, the employment is typically a lagging indicator. So while the market started recovering in like Q1 of 2009, the unemployment rate didn't drop significantly for years. So the market really is a leading indicator. So I think the market will be the first thing not only to drop, which it already has, but it'll be the first thing to recover. But with that being said, let's look back here again at the QYLD. So what drives me nuts, Yahoo's changed how they do the yield here. They have this 0.32%, and I'm not sure if that's monthly or what. Beta 0.72, which means it's less risky than the overall market. And see, this one, if you look back to August, it was 23.05. So I think it's going to rebound. It's got somewhat of a positive correlation to the market. So it's not necessarily a perfect hedge against a dropping market, but the covered calls certainly help. But like I've seen doing the covered calls that I've done just in separate stocks, those premiums are dropping as the overall market drops. So that's what's happening here. So my hunch again is that this will recover when the overall market recovers. And then obviously there's no quarterly earnings to look at because it's an ETF. But let's go back here and look again at some dividends, because I know everyone, well, maybe not everyone, but a lot of my audience loves dividends, which is why I talk about it so much. It's also a good thing too. I mean, I've been a dividend investor for most of my investing career. QQQX, let's look at that one. So QQQX is quarterly. I actually bought more of this. I sold out of IBM this week because if you look at IBM, it's at like a 52-week high. So I figured it may move up from there, but I'm happy with a 52-week high. So for a year and a half, because I basically put my whole Roth IRA 2021 contribution into IBM, I'm happy with the gain there. I think it popped like 20 or 25%. So I'm happy to take the gains and run. And I put, because I only had 18 shares of QQQX, so I put some of the money that I profited from IBM into QQQX again. So now I have an even 100 shares. So now this will pay me a $200 per year dividend or $49 per quarter. Remember, this one's quarterly. But I like this one a lot too. Of the covered call ETFs, like this is probably my second favorite one. And then you can see here Intel and Dollar General. I'm actually going to sell Dollar General pretty soon because it's close to its high point. May keep going, but I'm not going to just stick in these and ride out. Even though I am a long-term investor, I want to, in this market, kind of sell stuff when it's at its peak, because you never know how long it's going to last from there. So QQQX, let's look at that one real quick. QQQX. The Nuveen NASDAQ 100 Dynamic Overwrite Fund. So this one is still higher than QYLD, and it's got the 9% dividend payout, which again is quarterly. Come on, Yahoo. So this one is actually, oh, this is just the 1 day. This one has dropped probably as much as QYLD. Yeah, you can see it's dropped significantly since April 4th. If we go back a year, let's see, it was $30. So it kind of stayed around the same up until the end of 2021. And boy, don't we miss those prices in 2021. It's amazing. Like I said in that post I just made yesterday, it's amazing how quick things have changed in just 6 months. But if we look at the 5-year view, it looks like overall the average return of this fund is pretty stable. So I think this is a stable one to stay in just for the dividend, or should I say the covered call premium. By the way, I'm going to do another video on how covered calls are basically like a duplicate or a second dividend. So keep an eye out for that. Tomorrow I should have the video out on my ad revenue for June, which I actually more than doubled May, which is encouraging. A lot of encouraging signs with this channel, even though it may not be growing as much as I want it to. I think I'll get there eventually. So let's go back to the main account, Apple and Blackstone. Yeah, see, that's why August is so much higher, because Blackstone pays its dividend August 9th. And let's see. Yeah, this is why the dividends increased in this one, because I just moved this over. And then let's see what else. Verizon pays a really good dividend. And let's see here. I was going to show well, I guess I'll just have to scroll and bleep this out at the top. Let's see. Last 30 days dividends. In the Roth, these were the total dividends paid. So IBM, I got the last dividend I'm gonna get from that I'm gonna get from them before I sold it. So you can see there. And then in the individual brokerage account, in the past month, oh, let me do this, June 1st to June 30th. Here we go. Now I have a mutual fund, which, as you know from one of my prior videos a few months ago, I'm not a huge fan of mutual funds because of the expense ratios, but I kept a couple of them that I got from my previous employer for the dividend that they pay. So I have this large cap growth ETF, and this pays a semi-annual capital gain. So that boosted my dividends for the past month in this account. So you can see 25.27 for Gilead Sciences, 12.15 for QYLD, a whopping 25 cents for this PJT, 66 cents for an evil oil company's payout, 286.31 for Columbia, 250, 12.50, and 351. So $343.15 for the past month in this account. And then the IRA, just to add those up real quick again and go back to that. This one paid whopping, see, this is funny because QYLD pays like two separate ones. It pays like, oh, because for some reason it's 210 shares, but one share gets paid separately from the other 209. So I'm not sure why that's segregated from the others. And then 36.26. So that's a total of 36.43 for this month. And then 5 cents for, that's just the money market dividend that's, you know, for the cash that's in the account. And then this Chinese company, 10 Cent Holdings, charged me a fee. How dare they? Processing fee of $1.27. So that takes away from the dividend return, even though it's classified as a dividend. And then they paid me $10.60 for their whatever that is, cash dividend for the year. If you have that fund, you don't hold it for the dividend, certainly. And then IBM 82.50, QYLD 37.49. Oh, you know what? It's going to skew this number because basically it paid a bit later because of the Memorial Day holiday. So I got the May dividend in June. So I got it twice in the month of June. So that's why it's showing $165.80 in total dividends for the month of June. So that kind of skews it. So with that being said, those are the dividends from the past month. I figured I'd just go ahead and show everything. And I updated on QYLD, QQQX. Those are the two covered call ETFs that I own. Still a big fan of those. I think things are going to recover. I think as investors, we should all hang in there and just ride out the pain to get back to the prosperity of the market. With that being said, I hope you like that. Please remember to like, comment, and subscribe, and keep an eye out for my next video on my channel performance over the last month. Thanks for tuning in. Take care.